Good morning, everybody. Welcome to the Flow Show. It is Monday, the 29th of September, and we approach the end of the month, end of the quarter. We've got all that to look forward to, keeping an eye on the clock every hour, going into the fixes and whatnot. And we've got a big, old, busy data week as well with NFP on Friday. It's going to be another stonking week. You had a couple of weeks off. Well, call it a couple of weeks off where things quieten down after the FOMC, or week off. And now we're back in the thick of it once again. Morning, Kate.
Morning, Ryan. Morning, everybody. Ready.
Yep, we are ready to go. Right, let's get cracking. Going to start off in China. And a little bit of a language change from the PBOC in terms of their policy. Previously, we've had them talking about, they tend to talk in standard language. They keep the same sort of language. And they previously said that they would continue to implement appropriately loose monetary policy. Well, they've changed that slightly to they're going to step up monetary policy adjustment, which pretty much sounds like there's going to be some potential rate changes possibly coming sooner rather than later, or they're going to do some other tinkering around the edges with their various programs and whatnot going on. They did say they're going to keep the exchange rate basically stable, so they're not looking to perhaps do anything in the currency, but maybe stand by our beds. The thing with PBOC policy changes these days is usually only good for a quick spike here or there. Usually Aussie dollar is one that likes to move over these policy changes, and then it's all forgotten about 10 minutes later, because usually it is well telegraphed. But we'll be on watch for that. Over in Japan, at the last Bank of Japan meeting, we had two dissenters, Takata and Tamura, who dissented in favour of hiking rates again. It looks like Bank of Japan's Noguchi is leaning that way too. Says the policy rate adjustment is becoming more likely as Japan moves towards its 2% inflation target. Data shows that we're moving steadily towards that target, and a policy rate adjustment need is heightening more than ever before. So the need for a policy rate adjustment is heightening more than ever before. But there's obviously some caution. The economy and prices face some downside risks, but upside risks are increasingly important in policy decisions. But we may need more time for real wages to be positive, particularly after that last data got revised from a positive to a negative. Kay, looks like we might have another one jumping across the fence.
Yeah, and there's been a few interesting bits and pieces out of Japan. Well, first of all, they're now changing. Well, some of them are more leaning towards a hike. We've been talking about it. Could be happening at any meeting from now. And then we had that polling and even a speech from Takahashi, right, saying that she may even be looking at trying to negotiate the deal with the US, and Koizumi coming up in the polls. It's all been a bit yen positive what came out overnight.
Yeah, and everything else going on, geopolitics stuff that we're going to talk about shortly. There's lots of things in the mix. The yen seeing some strength, while the dollar sees some weakness as well. So that's given dollar yen a bit of a kick in. But yeah, that polling. So there's been a couple of polls out. Maybe the one of major note is the one polled amongst LDP members, which puts Takaichi on top in that poll, with Koizumi coming second and Heishi in third. That was a Kyoto LDP member poll. But in another poll, an ANN poll, Koizumi is leading the race at 33% versus Takaichi at 31%. So it's a bit all over the shop, but probably the party poll is the one we need to keep an eye on, because that'll be the one that everyone's going to be voting on anyway. So how does that Does that really change anything? Could Koizumi slip in there, or are we still looking at Taichi as favourites?
I would still somewhere place Takaichi as a favorite. But yeah, we can never rule it out. The thing is, though, for me, okay, Takaichi is the more clearer Abe version too. But Koizumi, I don't know if it's going to change an awful lot. I think the market uh, is perhaps trying to play around with between the one and the other, because Koizumi in the end is also a negotiator, and they will need third parties to decide upon anything. But yeah, I mean, for the psychological effect of it, Koizumi slipping in there or regaining some on Takahashi may already take some of the downward pressure on the yen off. But again, I think it's a bit of a combination, because if Takaichi now says that she's going to play it a little bit more hardline on that US deal as well, that may raise a couple of antennas. Because usually she would be seen as the big spender coming in and continue to weigh on the yen. I think the reaction is what we saw overnight is just a combination of all of those things, you know. But yeah, I mean, that's what the market expects. I mean, Takaichi, bearish yen, and the rest less. But we've seen that the harder liners, like Motegi, for instance, they don't really find enough support. So, is it not all going to be like a temporary setback on all things yen? That's still somewhere in my mind.
Yeah, I think so. Right, moving on over to the UK. City YouGov poll on inflation has the short-term inflation expectation staying steady at 4%. Longer term increased from 3.9 to 4.1%. So a bit of pain in the polling for the Bank of England. That hasn't stopped. Bank of England's Dingra over the weekend calling for more rate cuts, saying the factors driving rising costs in the UK will soon fade, and claiming the economy will be damaged by restrictive monetary policy. There's also another policy that might do some damage. It's fiscal policy. Reeves has started her offensive ahead of the budget in just over a month's time, nearly 2 months' time. She's been out and about, presses, TV, radio, all over the shop. Has refused to say there won't be more tax rises, but then also added that she's standing by her promises not to raise national insurance, income, corporate taxes, or VAT. So everyone's now looking around to see who and how they're going to get clobbered, because you've got to raise some money somehow. If you're not going on the usual taxes, it's going to be pinched out the pockets elsewhere. As I say, this offensive has now started, and we'll be getting lots more detail. So we should have an idea of the budget long before we get to it. And if you're trading a pound like we are around it, that might be the time things might change or even get worse, but we'll wait and see. France PM Le Cornu says that he's starting the 2026 budget from scratch, and that the priority is reducing spending in the budget bill. This is basically the crux of why the last PM got ousted, because he couldn't get a budget agreed. So this guy's going to have a go and see if he can do anything differently. We'll wait and see. They've had further protests in France and whatnot. So they're still under the cosh over there. But those headlines are going to be coming through as well. A bit of data this morning. We've had Spanish CPI data coming in, hotter than expected. Well, not hotter than expected, hotter than last month anyway. In some cases, not as hot as expected. CPI coming in at 2.9, was expected to jump to 3.1, but that's still 2 pips up on last month. The Eurozone measure HICP coming in as expected and confirming a 3 pip rise over last month as well. So Spain, one of the few countries seeing some hotter inflation over there, although their core measure came down a pip there to 2.3%. They also had a bit of retail sales data out of there, but these are year-on-year numbers coming in at 4.5%. Just a little softer than the 4.7, but still running pretty good over there anyway. We had some data out the UK, not much to talk about though. Mortgage applications and consumer credit, very little changes there. Mortgage approvals just coming in shy of what was expected, a little bit lower than last month. Mortgage lending, same story. Bank of England consumer credit staying around that 1.7, 1.6 billion mark. No real change there. We also got some Eurozone consumer confidence, business confidence numbers there. Business confidence ticking up to 95.5 from 95.2 expected. The prior was also 95.2. They got revised up. A little bit better in the components. We saw industrial sentiment. Well, it was a little bit better, but because of that revision, minus 10.3. Services was expected to fall to 3.7, but came in at 3.6. On the inflation metrics, though, that saw consumer inflation down at 24 from 25.8, and firm selling prices ticked up to 6.9 from 6.8. And the consumer confidence number staying unchanged at minus 14.9. Going over to the data from last week in the US, the PCE numbers, Powell nailed it again, bang on the money. We saw PCE up to 2.7 and the core staying unchanged 2.9. Though we did see some of the income and spending numbers just moving up a touch, coming in better than expected, 0.4 and 0.6. So that's basically what we've seen in the retail numbers as well, that the US consumer is still ticking along okay. Even Canada got a little bit of a boost there with GDP on the month of July up 0.2%. University of Michigan consumer confidence number. This was the final read. That dipped back a little bit. Headline consumer sentiment 55.1 from 55.4 previously. All the numbers there showing red, including those inflation numbers, pulling down a bit, although the 5-year does stay higher than last month. That was it on the data. Then we move over to central banks. Fed's barking, says not much confidence in any inflation forecasts at this point, which is a lot of help. Says companies want to pass costs on, but consumers are trading down and shopping carefully. He now sees the break-even jobs rate at a 0 to 50k range, so rewriting those a bit lower. Fed's Bowman, a little bit all over the shop. Says we've seen a more fragile labour market shown in recent data, and that it's time to act decisively and proactively to protect jobs, but prefers a gradual approach to rate changes. So she was one of the ones who might have been expected to call for a 50, but ended up not. But she wants to be decisive and proactive, but only wants gradual rate changes. So try and square that circle. Fed's Hamak says we have pressure in inflation, particularly in services. Trump was out squawking and taking victory laps, saying that the economic numbers were great last week. The White House issued a bit of a clarification on the pharmaceutical tariff, saying they do not apply to countries with negotiated trade deals, which goes for the likes of Japan and Europe. Though, funnily enough, the UK's pharmaceutical part of their trade deal was still under negotiation. So potentially the UK is facing 100% tariffs if those go ahead. Typical that we can't get everything sorted out in our trade deal, which was one of the first to be done, I'll have you know. Trump was also speaking on a potential shutdown, saying that if Democrats refuse to make a deal, the country closes. And he's confident that voters will side with him if that happens. Today, the Senate reopens. So if there is anything to go through, it'll have to be shoved through pretty quickly. Otherwise, we've only got 2 days to go, and then it all shuts down. And we have to see exactly what gets shut down, and I'll talk about that in a moment. Russia has called the shooting down of Russian jets amounting to a serious spike of escalation near Russia's borders. So any threats to that, they won't take kindly to. Well, stop sending your fucking planes everywhere then. Russia's Medvedev says Europe cannot afford to wage war with Russia. Russia does not want conflict with Europe, but if such a conflict is unleashed, there is a real risk of it escalating into a war with weapons of mass destruction, and the possibility of a fatal accident still exists. Apparently, we were talking about this, and this is all part of that Axios interview last week. Zelensky apparently asked Trump for Tomahawk missiles, attempt to force Putin to make peace. Trump told him that he was open to providing new long-range weapons. Special envoy, US Special Envoy to Ukraine, Keith Kellogg, says there's no such thing as sanctuaries in Russia, and that Ukraine can conduct strikes deep within Russian territory, though he did add that it still requires US authorization for them to use US weapons inside Russia in specific instances. ABC News reported that classified US intelligence is warning of China's preparation for a Taiwan invasion. And that ties up with comments from China as well, because they've urged the US to uphold the One China principle and to oppose Taiwanese independence. But again, there's going to be some US bods travelling over to Taiwan for a visit in the next few days. So obviously the US sticking two fingers up at that. But we are getting this, we've been speaking about this pickup in rhetoric, Russia, Ukraine, the West and whatnot, and that's still bubbling over. So be prepared for anything untoward happening. Kay, got any thoughts on the latest mechanics of this Russia-Ukraine stuff?
Yeah, it's not it's not improving at all, right? And then the Chinese adding a little bit. It seems like they will want to link the Taiwan situation to any trade deal potentially as well. Yeah, I mean, it's not improving. Hasn't improved over the weekend. The biggest sending over of flying stuff over Ukraine in months from Russia. Yeah, I mean, all those risks that we're always talking about, they're just still there, and they don't seem to wane anytime soon, right? The one thing well, is just a small headline, because it hasn't really. I don't think that was any reason for the euro to come bid, but Fitch interestingly upgraded Spain. Finally, Spain got some recognition from one of those rating agencies.
Yeah, well, what did they say?
Well,
they're not as shit as they
they
were before.
upgraded Spain a notch on Friday evening.
Did they? Oh,
Yeah,
congratulations. They'll be partying in Spain over that one. We'll have to see if Leandro's in work today. He might be out celebrating that one. Yeah, another good news for Europe, obviously, got to mention, is that we gave you Yanks a good old spanking. Well, you can say that now after the event, but it was a bit of a hairy moment in the old Ryder Cup on Sunday. Certainly the Yanks put up a bit of a fight, but Europe managed to squeeze through. And yes, despite Brexit, we are all European for the weekend here in the UK. So yeah, we turn it on when we need to. Right, let's move on. Let's have a look at what's coming up this week, because as I said, it is a busy old week. So we've got the RBA tomorrow, which it looks off the cards that they're going to do anything at that meeting. Any surprises from there? Maybe a hint at what's to come, Kay?
The RBA.
Yeah.
Don't change a steady hand right now. Well, probably like everybody, data depending, leaving the door open. Maybe the market will react a bit to it, but Bullock not being a dove. I suggest steady ship, and that's it for now.
Yep, I think so too. So they, particularly after that CPI report, got the market thinking that a rate cut was even further off the cards. I think people are penciling November as potential, though. I think that's their next meeting in November. But yeah, so this one might fly by without much fuss. Right, we've got some retail sales from the Germans, GDP data coming up from the UK. That'll be monthly numbers. It is a week of inflation from Europe, so we get flash numbers from France and Italy and Germany. We'll get all the regional numbers. Why are my clocks all out the sync? Bloody hell. Oh, I'll have to go and change that afterwards. All these times are, I think, US times at the moment. Must have been a cookie change or something. Anyway, so got a bit of inflation data tomorrow. House price data from the US tomorrow as well, and US consumer confidence. That's the conference board number, consumer confidence. JOLTS later on. Also, Japan's Tankan survey, something the BOJ keep a close eye on. So whatever watches as that as well. We do then kick into final PMIs from Europe and elsewhere, US as well, when we start with the ISM manufacturing numbers. So that will be a close watch ahead of the jobs report. Also got ADP, of course, coming in. And somewhere in there, it's Thursday, Challenger Grey layoffs will be coming through on that, see if there's anything showing in that. Factory orders on Thursday, and got some Swiss CPI, so that might be something to keep an eye on just after the SMB and what inflation does there, whether that says the market gets the market thinking about negative rates in more detail. Friday, we get a few bits and bobs, some other final PMIs. And it's obviously the US jobs report, which is going to be the big one if it happens. And then ISM services index. Now, say if it happens, and Fred's asked this question, if we have a shutdown, there is a danger that we don't get any data from the US. We don't get the jobs data. I did look back in the end. The last shutdown, 2018, 2019, we did get jobs data because the BLS were funded through the shutdown. So it all depends on whether they keep their funding through the shutdown. And this sort of stuff is going to be decided once we know if there's going to be a shutdown at all. So it's not 100% definite that we get the data. It's not 100% definite that we don't get the data in a shutdown, but we're probably not going to know until the last minute, or at least over the next couple of days. If we don't get the data, it's going to be a right old shit show. And if we do get the data, well, then we crack on as normal. So it's a bit up in the air at the moment. We'll have to wait and see what comes from that. Now, if we do get the data, it's potentially going to be messy as well, because September is the month that we are potentially expecting to see all those government layoffs maybe dropping in that we got earlier this year. We'll get to see whether it's as many as what were penciled in to be laid off, or whether it's less, or whether it's more. I have heard talk, I think my mate Michael mentioned this a while back, that the BLS might do a separate component for those layoff jobs, because when we get the NFPs, we get private payrolls, government payrolls, and manufacturing payrolls, and that's what makes up the main NFP number. So if we get a big government number, then there should be a note of some sort to say how many of that was Doge cuts or whatever. So that's a possibility if we do get the numbers, but it's going to be a known unknown. We know that it's potentially coming. It's just whether it's as bad or better than feared. I think, Kay, that might be the risk if we see these numbers dropping in, that it won't be as bad as feared, because there's been some legal challenges and whatnot. If it comes in that there are only 150 government jobs lost, I think the market might see that a bit positive. Well, depending on what the other numbers are.
Unless we get a full set of data, maybe the market this time will say like, well, There's always going to be a reaction to it, but is it going to be the market just going like, oh well, yeah, we had those numbers, but we can't rely on them, so moving on? That could be the case as well. If those numbers are distorted. But yeah, as you say, they may not show, and we all of a sudden got a much better number than the expectations are. I haven't actually looked at the expectations. I will be off, but what are the expectations for this week in the payrolls? Do we know? Where are they? Just trying to scroll through. 50K. Yeah, this it's interesting because now and I missed that, and Michael reminded me of that. Powell as well said that the break-even rate not only could be somewhere between 0 and 50K due to the migration changes, but yeah, this would be interesting, and because that would make every number above the 50K mark actually a positive one.
Yeah, exactly. But obviously, we could see a negative headline number. So if it's
As well.
down 100, and but 200 of those are government jobs, then people will be taking those off and working
Mm.
out that it was actually a positive. So it could be a complete mess, this one, and I don't know how the algos are going to deal with it. We could get some fun and games on the initial release. So I think this time you've got to be very quick to see where those jobs are coming in. As I say, there's three categories: private, manufacturing, and government. Okay, so keep an eye on that number, because if you see a bad one there, but most of it is government, take those off, and that will give you a more real number, if you like. And if that turns a negative NFP into a positive, you might be able to grab a little opportunity there if you get in after the algos have reacted negatively. But yeah, I might take the day off as well. It's going to be a messy one. Yeah, I might finish early and you can all deal with it. Anyway, I won't.
Maybe isn't there a West Ham game with your new manager?
Not on a Friday afternoon at 1:30. No,
Ah, yeah. Put on
no.
put on your shirt and at least pretend also.
Yeah, I'll watch an old video, cup final or something. Right. Anyway, so that's what we've got coming up this week. So it is going to be a busy one, and no doubt we're going to get lots of price moves in between. So keep an eye on those key data points. And obviously with the ISMs, as I said, services we get after the NFP this month, so that won't be used at all in doing any last minute expectation changes for rates and stuff for the Fed ahead of that jobs data. Right. Anyway, enough of that. Let's move on. Have a look at some price moves that have been going on. As talking about dollar yen, a pretty steep move off of that high run that we got to the 150 level. We're back under this 148.80s as well, this range top that we've been stuck in for a few weeks, bar the odd exception like that and that and that. So potentially we are going back in the box, and it has been a case where this has been, as I say, a bit of a strong yen move pretty much around the crosses, but also twinned with a bit of a weakness in the dollar as well. So a bit of a double whammy for dollar yen at the moment. Kay, what's your thinking? Is this maybe we're seeing the month end stuff that the models were all
Yeah.
predicting dollar selling,
So
or is
it's
this just
all,
risk?
yeah, month end, quarter end, whatever end, whatever end, and then the combination of that, all that's been said, and people scaling back perhaps a bit of the on their short yen positions. I was a bit short yen as well, but let it all go, and just keeping things a bit neutral right now in the yen. Um, where I am a little surprised, not surprised, because okay, we had these headlines and stuff, but um, in my it's not a model, but my findings are that yen should not be sold for month end or quarter end because of the Nikkei and the topics moves. But You never know, because the models, the bank models are calling for, um, well, any currency buying versus dollar basically for month and quarter. And so I think it's more of a position adjustment right now because, okay, we may see it. And that's the reason why I didn't keep it, because if those models are right, yes, dollar yen could go a bit more down. But yeah, and all in all, I'm not yet on board with a stronger yen. That's for sure. But I'm happily going to let the market do whatever it needs to do for a month or quarter, and over the next couple of sessions, it may be that yeah, that there is a bit of dollar selling against yen as well. But I think the moves that we see here, because they are also accompanied by lower crosses. That has more to do with those headlines that we had regarding the election. Takaichi, what was the guy, Noguchi, comments. They all came a bit together, and that has made the yen market think at least the yen shorts, right?
Yeah, I think so too. Yeah, I've still got my longs in dollar yen. I'm going to keep hold of those. I've still got my stops well out the way. Well, I hope they're well out the way, below 147. So this one can do a bit of walking around. And I think maybe again, once we're over the hump of what's going on with month end or whatever, we get back to the Japanese stuff and what's going on over there. And
Absolutely.
we'll have to see how that turns out. Yeah, because Takaichi is still the main risk to the yen.
Mm-hmm.
So yeah, still in the frame, and we'll see what happens. Is that going to be a long drawn out affair, that vote, or is it going to be we sort of come in the morning and know what's going on?
Yeah, wow, I don't recall exactly if it's on the same day, but we should have the two main candidates come out and then they have a runoff. But I would suspect that they could all do it in one day. But I'm not 100% sure. I must admit. But if it's so, it's going to be done on fourth,
I think,
eighth,
yeah, fourth. I think last time
Saturday. We
they had three
by
runners.
by 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 Monday market open, we should know,
Yeah, because I think if I remember the Ashiba stuff, we had three runners that then got knocked down to two. Because that was when Takaichi got knocked. She got knocked out in the first round. Oh, did she get knocked out in the first round? I can't remember.
No. She was the
No,
runner-up. She
she came
was
second. It
the
was
one running off against Ishiba.
yeah, and then I can't remember if it was the same day or day after when.
But if it's the
the next
day after,
one.
we will still know before markets open.
Yeah. Okay.
Yeah.
All right, that's good anyway. So yeah, I think if they're following the same format, it was two rounds last time, but I don't know if it matters how close people are in the first round of polling. But yeah, at least we'll know. We'll find out whatever.
Maybe there is a something to do if by any chance Koizumi passes really tight or so. I guess the market will have this knee-jerk reaction on the yen, buying yen, and then having to start thinking again.
Yeah. So keep an eye on your yen trading going into the weekend because it could be a bit of a gap Monday when we know the results or whatever. Right. Anyway, moving on. Euro sterling had a little pokey under the level again, 87.20. It's back above. This is getting a bit indecisive at the moment. I said this has been a bit of a tight range to sit in, go with one way or the other. We don't get the confirmation in this break though, below 87.20. But this might set up a decent double top. There was a pretty firm hold that we got last week up at that prior high. And if it can't get through there, then there's only one other way it's likely to go. That bounce last week off of that, or the overnight, just into the 30s off that test, not looking strong at all. So we could be seeing a move down. I think this is one that's still moving a bit on the speed difference between cable and the euro. The next main level is down at the figure, but I could probably see a bit of stuff coming in around 10, 87.10s, just all these little moves that we've had previously through here, and that little low there. So probably we're looking at every 10 pips, you might find the price pulling up. I'm still happy to be long this, and we're still creeping down to the Rachel Reeves stuff. But if we're not moving on any sort of headlines moving forward, as I say, we've had her out today and not really doing much at all. If that continues to be the case, I might start questioning how long I want to sit in this or how much I want to keep on while that's going on. The only one I want to look at before I punch it over to Mr. K for a couple is dollar MEX, because after that move above 1850, we got back under and started holding under again, and that's seen the price wash out a bit. I think another case of, well, we couldn't hold a break, so the other way is down. I've just put this in for more visual purposes. We were in this uptrend off of this low, this bounce, and we looked like we were breaking it. But I think this level here, 1830s, is a bit of a do or die level for this one. If we're breaking that, then that's going to pretty much break that, and we'll end up maybe going back down towards here. But this is all very short-term price action, so I'm not going to be relying on it. I'm just doing it for the visuals. As you can see, we're just trying to move back above that line again.
Keep on there.
What?
Have you noticed, and I really noticed that, is that the past 2 sessions, Mexico got actually bought into the London fixing. The dollar MEX got sold pretty heavily actually on Friday, where the rest of the dollars was like, yeah, a bit lukewarm here and there. We had a little bit of last minute action from the US corporates perhaps, but then dollar MEX got sold twice, and specifically into the London fixing. So I'm not excluding that we actually go to see the low of the range before this month is over, because it was very noticeable.
Yeah, I saw that after I'd got out me 18. Take me profit at 1840s. It carried on going.
Me too. Yeah.
So at the moment we're bang in the middle. So I mean, I might have a little nibble long at the range bottom if it's a fixed driven move, just to see if
watch tomorrow. Huh?
Yeah, see if we test that area and then see what it wants to do. But I don't see at the moment. I don't see a case why either side should break significantly. So it could set up for a bit of range trading. The fact that we couldn't hold that 1850 break for any length of time, pretty telling.
Trade with the clock,
trade with the clock, and then see if this level, if we've sort of cracked the door, and whether another move up gets through a bit more easier. But I think if we get a move above another time that starts to hold on any dip backs, I think that's the one potentially to go with on the long side. But we shall see. We shall see.
Yeah, I think so. I think the start of October, depending on where we end tomorrow, start of October could be actually pretty interesting. And in the meantime, any move above or below, depending on what time we are trading it, could be a bit of a fakey as well. But I would rather think that looking at what we did end of last week, I don't know if there are any, with those remittances, etc. I mean that always muddles the picture a little bit, the fundamental picture a bit. Maybe the seasonals also are playing here in play. And then in which case we could actually see the acceleration tomorrow and then completely reverse to the downside.
Yeah, absolutely. Right, I'm going to hand it over to you, mate. And while I'm doing that, Ali, you know what it's like. We like to have a look at trades now and again.
And we are not angry.
Yeah, we're not angry. If there's other things going on that we want to talk about, we're going to talk about those as well. Your trading always sort of follows the same pattern. So, you're not doing anything new in terms, you have your 40 pip stops, your 40 pip take profits and whatever. And you're often trading around in the middle of levels and whatnot. So sometimes there's just not much to say about the price action. But anyway, Kay, I'll leave it over to you.
I mean, it is an interesting watchdog, this cable, because we had a really good bounce of this kind of line, prior top here, then we flew through, and then it's been a bit of a low on Thursday, Friday. We tested it, and we had a pretty decent recovery, also helped by this by the euro sterling coming off, as Ryan already mentioned. It's still a decent range on the euro sterling, but the fact it rejected really put a solid bit under the cable, and I would suggest on the tip of my toes it may not be done until tomorrow afternoon. So I know you're short, Ali. I'm not going to be short in this one just right now, just because of the timing, okay? And end of month, end of quarter, it can be so volatile, bit unpredictable. The models are calling for dollar sales, and perhaps this looking at the divergence between the FTSE and the S&P and Nasdaq, it could be, that we push through here, and I was also mentioning it on the morning updates. It's probably going to go up and down, but I'm not going to bet on the fact that we are going to go back down on this one just right now. Maybe tick down a couple of pips, but just look at what we are doing on the clock, okay? The two that we have to watch again, these metals. It's just a case, all those reasons about geopolitics, shortage of supply, etc., 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 have again added another $50 to gold, for instance. We opened at around 37.60, and we went up to 38.20. Where does it stop? We just don't know. Okay. I would say just be aware that sometimes the demand can just dry up, and then all of a sudden we have those big setbacks. And especially I'm going to have a quick look on silver maybe. But for whatever reason we bought it and the market bought it before, those reasons are still there. So whatever setback we have is probably going to be limited to demand drying up right now, but I guess we are going to find support anywhere if we would be back in this zone here. I would only be really looking for deeper setbacks if we start to get back below this zone here, okay? And it's valid for most of the metals. I'm only going to look at gold and silver, but I know that Stelios, for instance, is also still in platinum, and that thing is also ramping higher. It is very, very, very difficult still to call a top. If you want to sell into it, it's just going to be a lucky shot, basically, lucky shot. There's nothing fundamental to drive it back down right now. That's just as simple as that. Um, on the day, though, we could have a first indication that the buyers are gone, and I would perhaps look at it from the US session side as well, because Europe, as we are seeing again, we entered at around 38.15 this morning, trading 38.09. Europe is still not the biggest part, or still not the main players in this, but US is. So watch those US sessions. Um, and again, I'm just looking at what happened prior months. We do also have, and maybe those are contracts, etc., to be settled. We do sometimes see pretty violent move into month ends as well in the metals, and being quarter end, it could be the case. Maybe that is what is driving this whole thing until tomorrow. We will see. And then afterwards, maybe the demand will drop off, and we will see a deeper retracement. But also as I said, keep an eye on the clock. And it could be that if they are not done yet, any move back down to 37.90 already sees demand. But we have to look at those extra extensions, and I would say especially these two here, around 38.80 and around just shy of 4,000 if we continue to rally into month quarter end. The market is talking about this 4,000, but I really think again, look at what's happening at the clock and what time that we potentially hit those next levels. I would say start I would be a bit careful once the month is over. Silver, and I'm here on the very, very long term, 45.40. We didn't even grant a look at it. We closed above on Friday, and Asia needed another buck to it. We clearly eyeing that the 2011 high. I don't see much here. Some people are looking at 48, but I really don't see much before we have that high here, just shy of 50. There is a bit of an extension level just above 50 and a half. I would say though, if we see that hit in the next 2 sessions, be careful what happens afterwards, all right? Because it could be, as I said, that we are building up towards this end of the month, and then all of a sudden see demand drop away. But again, if you look at what people are talking about, the supply, the need, and I've already been saying it, as unfortunate as it may be. I mean, if you look at whatever drones, warfare, whatever is used from that side, they also need silver for conductors, even gold. And there is still a valid fundamental reason why those things are remain very big. But okay, nothing goes one way, and this has been going one way. If you look at, okay, we've had this enormous spike in 2020 on the back of COVID. We had this move as well after the global financial crisis, where it rallied. But now this is starting to shape up as a really exceptionally fast rally. So if we would get up there, I would be a bit careful. Okay, if we hit it there, and especially looking at the clock, then all right, looking at when we are hitting it. Okay, what else? Don't have too much else to. Basically, we are in this scenario of the dollar giving it back, and again we've been talking about it often. Bit of resistance here in the euro dollar, but watch the clock, guys. I think before the end of tomorrow, we may have recovered a little bit more, and it's valid for most of the dollars. The only one where I'm a little reluctant, I don't want to really play it, is the Kiwi, because the Kiwi is still showing a lot less buoyancy than for instance its cousin the Aussie dollar, which is already recovering much better. And an interesting little level here is really close on the Aussie dollar. If it starts to break above 65 3/4, sorry, I think we can have a bit of a wander back into the 66s. So that is rather that side of the market that I'm looking at right now. Ali, I'm not angry at you, but you're asking me about the Euro Swiss. Look at it. Look at it. What do you want to do with Euro Swiss? Give me a valid reason to do anything at all in the Euro Swiss. Ryan, back over to you, mate.
Thank you very much, mate. Yeah, we'll call that a day for today. We've got you set up for the week ahead, what's coming up. Trade safe, trade well, and we'll see you all nice and early tomorrow. Have a good one.